Focus in on earnings then, and let's focus in on PNB Housing Finance. It's had a reasonably strong quarter on the earnings front. It's posted a PAT of 243 crore rupees. That's more or less flat compared with the same quarter last year. Net interest income has grown as much as 13%, and gross margins have expanded to 3.3% from about 2.6% in the year ago quarter. We're joined now by the management. We've joined by Hardayal Prasad, who is the Managing Director and Chief Executive Officer of the Housing Finance Company. Thank you so much, Mr. Prasad, for joining in. I want to start by asking about the performance. It's been relatively good in the context of the tough environment that we're currently seeing. Operating profit up as much as 17% year on year. Your profits have declined on account of high provisions. That's a par for the course. But could you take us through some of the key aspects of the performance?
This quarter has been reasonably good for us, keeping in view that the second COVID wave had hit very badly and almost about 45 days were lost out. We being a housing company which focuses on self-employed, obviously the economy had hit very badly. But even if you look at the overall performance in terms of the profit, which has shown a decent growth, and if you look at sequentially, there's a 91% increase in the profits. The disbursements have been very good. And if you compare it with last year, they've been very, very good. And importantly, that the disbursements are on the retail side, which is what the company had decided that it's going to be a retail-focused company. One of the most important thing that has happened is that on the deposit side also we have done pretty well. And we have been able to improve the deposits by almost about 6%. Because of the way that from January onwards we have been rebalancing our portfolio in terms of moving away from the corporate book and focusing on the retail, and the consequent advantages that one gets because of the the risk weights that that are lower on the retail side, our capital adequacy ratio as well as the gearing have actually improved. So I think if you look at it, this has been a very, very good quarter in terms of the numbers that we have been able to showcase and the numbers that we have delivered.
Good morning, Mr. Prasad. This is Cheryl also joining in. If you look at your asset quality, your gross NPAs actually have inched up about 155 basis points on a quarter-on-quarter basis to about 6%. What has actually been the COVID impact across the retail loan, which actually forms nearly 85% of your book? Also about your corporate book, if you could shed some light on that front as well.
The asset quality has suffered to some extent, and the reason is, I mentioned to you earlier, because of the almost 45 days lost. The second biggest thing that happened is that almost all the high courts have put some kind of an embargo in terms of either SARFAESI action or any other legal action, and that has definitely put certain amount of problems in terms of the recovery that we do. However, what we did is that as we realized that the asset quality was improving or it was declining, what we have done this year is to make adequate provisions so that we ensure that the company is well positioned. However, there is one very redeeming thing that has happened, and that is in July. If you look at it, after the lockdown was lifted, somewhere in the middle of June, our collection efficiency is back to 98%, which is, I think, almost at the January-February levels. And that's very, very redeeming factor. The second biggest thing that has happened is that when we started resolving these accounts, we were able to do absolutely amazing job in terms of the resolution that we were doing it on the stage 1, which is 30-day kind of stuff that we do. And that is very important from the forward flows that can take place and the accounts can become NPA. As I think most of the courts have put some kind of an embargo up to 31st of August. Once that is lifted, I think the kind of resolutions that we have done it in July with some kind of a reduction in the NPAs and stage 3 accounts, we are very confident that we'll pull back these accounts.
Let's talk about your loan book. It's declined year on year, but was that a fallout of the impact on demand on account of COVID-19, or was it because you took a cautious approach in the context of the pandemic? And given the uncertain environment due to COVID, what is the kind of growth that we can expect in the current financial year?
I look at it a little differently, and the disbursements that we have done in this quarter, despite the lockdown, have been in all segments. If you look at the logins, you look at the sanctions, you look at the disbursements, we've done a decent job this time. The business, when in Q4 FY21, if one looks at it, when we have flat in terms of increasing our disbursement by almost 50% in that quarter, we were expecting a similar kind of performance. But if you compare it with Q1 FY21, obviously the numbers are very lockdown that was there. But the growth that has come up is registered in almost all segments, which is you look at the logins, you look at the sanctions. Secondly, I also would like to actually mention that what we have, the way we have been looking at the economy, we definitely feel that the growth may be a little premature to say whether the growth is going to be great, because the total impact of COVID-2 is not known. However, on AUM basis, we expect that this year, going forward, in FY22, we will see a single-digit growth. I would like to reiterate that in terms of the disbursements, we have mentioned it in the earnings call also, that we are looking at almost 50% increase in the disbursement this year. You would recall that we did disbursements of almost about 10,000 crores last year, and we are looking at a 50% increase. So if one compares it from that perspective, I think we are looking at a very, very strong retail disbursements growth.
Mr. Prasad, on May 31st, your board actually approved preferential issue of about 4,000 crore rupees via equity shares as well as warrant. What's the status on that particular front on your capital raising plans? And as also, could you most importantly tell us for how long will the current capital last?
On 31st of May, we announced the raising of the capital. At present, our appeal or the issue is resting with the SAT, and we are awaiting a final order from that. Once we have the final order, the future course of action will be decided on what we want to do in terms of capital raise. Since the matter is sub judice at present, I would not like to comment on what exactly would be the future course of action, but we await the order of the SAT, and as soon as it is there, we definitely will come out with our strategy of what we are going to do in terms of the fundraise. However, I also would like to reiterate that we continue to operate a business as usual. And if you look at all these rebalancing of our portfolio, the initiatives that we have taken, all these are resulting into improvement in our capital adequacy ratios, in our gearing, and these are some of the things that are more important as we go forward in terms of the business that the company does it. As it's a 32-year-old company, it has strong roots in terms of a distribution network, and it works assiduously to improve on these things. What we are also looking at it, once these parameters improve, we definitely are looking at change of our rating outlook from the external credit agencies, as well as going forward, probably they will also see that if there is an overall improvement into the financial and the efficiency vectors, they will definitely like to review our external ratings. I think that those are some of the things that are very, very critical from this company's point of view.
Thanks so much for that clarification, Mr. Prasad. Wish you all the best for the future. On that note, we're completely out of time on this edition.